So the difference between private equity and venture capital, and what mismatch and what mistake is often done in Africa is that we have an early stage market in Africa, and we use products for a late stage market. Meaning that we have instead of having venture capital, we have private equity and lending. I'm not saying that we shouldn't lend, but if we agree that we have an early stage market which is in Africa, and this is the life cycle of a company, it could also be seen as the life cycle of an economy, different time scale of course. You could say that the venture capital market is typically, here you have seed money, and I would say that from here you have venture capital. The private equity market would be more here. Let's say that this is 2 and this is 4. This would be 4. That would be private equity. You would have then in the middle the growth market, which is 3. Gross capital, which is typically lending and also a part of private equity. The thing is that in a market like Africa, where you have a population of 1.1 billion people and have a very young part of the population, which is representing 60% of the population, you can say that you have typically other needs than you have in the Western market. In addition to that, the African economy is a very young economy. The African economy has a very close, is very similar to a venture capital market. Therefore, my postulate is venture capital markets should focus on Africa because the African market is an early stage market. One of the problems is that you have in the lending space in Africa is that most of our foreign exchange reserves of the national banks are invested in foreign TBs or bonds of listed companies, which is not a bad thing because you want to de-risk or you want to kind of hedge your risks. But I believe that if a bigger portion of that money would come back or stay in Africa, what would happen is the price of the lending would be much lower. Therefore, you would have a better distribution of small and mid-sized companies because the lending would be cheaper. The main reason why lending would be cheaper is today the national bank invests in bonds. The bonds invest in the interbanking system. That means Deutsche Bank or another company like that lends it to an African bank, and they ask for 6% or 4 or 5%. So the cost of lending of the African bank starts already at 5, 6, 7%. So then you have to add this cost because to your margin or to your cost, and then you have to put on top your margin. So therefore, I believe that if a part of this foreign exchange reserves stay in Africa, we will have less high lending costs, and that would also favor the venture capital market, which is a market which Africa should be focusing at, because venture capital will need to have a leverage. So if I'm putting $1 in the equity space and hope to grow more, that means I capture the first kickoff of my product. I sell my first tables, and all of a sudden the growth momentum kicks in. Then what I need to be able to lend the money. Now, if the cost of the money I receive from the banks is too high, I give all my margins to the banks, and their risk is too high. So therefore, I think that the money which are from the foreign exchange reserve should flow back into the African markets.